into another quick trade breakdown. Haven't done one of these in a while. This is going to be some thought process on AMD in terms of tape reading. If you're interested in learning a tape reading and you're not one of our students and you come across this video, feel free to join the free chat room below and also watch our 1 through 4 tape reading setups. So these 104 right here, as print above print personality, very ballsy. That's the term that we coined, is ballsy prints. And what does that mean? That means that a market maker came in heavy under a psychological level like 105. And keep in mind time frame as well. This is 1040, so this is well in advance of the 105 ask above print personality that we get coming up here. So we ended up getting 105. Yes, it does have some bids in that burst, but they were 105 hit on the ask above print personality. Watch the order get hit and taken out. So we have a 105 market maker above print personality at psychological level like 105. That position is a longer term position, and what that market maker's intentions are and what they have to do eventually is build on that position. So what does that mean? Is they need to bring the stock back under 105 to build and acquire shares lower. However, we saw that initial market maker at 99, 104.99 align and show shorter term. And we get more 104.99 market maker and then a market maker at 104.96. So we have multiple market makers aligning shorter term under 105. So it makes sense for these two market makers to work hand in hand. So 104.99 and the previous burst below is pretty ballsy, because why would you print like that if you understood 105 was going to print massively and they were going to immediately enter a building period for them to build on that? You just simply wouldn't. This is significant risk from a market maker at a desk right now at some big firm that understood that this stock was going to get pushed. And they wouldn't take this position right here if they understood that 105 was going to immediately build and this was going to come down to 102. It's just not something they would happen. They'd be in the red and it'd be negative. It just doesn't happen that way. So with that being said, it makes sense, and they both align. So the shorter term market makers, there's about 2 or 3 of them. It makes sense for them to push it up above 1 increment, or even an increment and a half, 2 increments. 1 increment is conservative, really should be 2 increments for how much risk they're putting on under a psychological level like 105. So 107 really makes sense as a price target. For them to push it shorter term above, for them to make their money on this position, and then eventually once they make their money on their position, the shorter term market makers, the dominant market maker 105 overall longer term can take over and he can build. So why does that make sense that they fit hand in hand? 105 market makers longer term, right? And we understand that eventually it's going to come over under 105 to take retail shares, but it plays in the market maker's favor to have this chart looking the way it does, getting pushed above 105, because the further and the prettier this chart looks, the more retail is going to be enticed to go long, because we know retail are chart traders and they're looking at price action and volume and nothing more. So we know they're going long here, thinking this has the ability to get to 110, what have you. So that plays in the dominant market maker's favor, because eventually when they do bring this down, they have more shares to be able to accumulate and take on the pullback, right? So that fits hand in hand with the dominant market maker, which is a longer term one, and then the 104.99. So the 104.99s are going to make their short term money to the upside long, and then the 105 is going to have plenty of retail that's baited in above to eventually, once the shorter term money dries out and they make their money, to bring it down and to take their shares. And that's kind of some concept here for you guys to understand. This was a 90% trade, just the fact of the 99 that we had under. We also had some great reactions above 105, but you have to understand here that, yes, per rules, that 105 right there says the stock needs to pull back, but we have to define our vision and our understanding, and we have to think analytically, right, of the variables around 105, which said shorter term push, even though 105 did say they need to build. So this is our number 1 short trade. If you were just looking at the 105 without any other variables, you would think, okay, this needs to pull back and build, and you would be looking for a short trade and you'd be shaking out over and over and over again, because we have these multiple market makers aligning on the shorter term side of things to push to a higher percentage. So that's kind of the trade breakdown here. Price target was 106 conservatively, really should be 107. And for this stock to transition back to a building phase, because right now it's in the shorter term money time phase, for it to transition into a building phase, we need to see the shorter term money start to get out. So we need to see them selling their position, and then we need to see another wave of short positions that are going to come in and short this back under 105. And in this case, we really haven't seen that much selling coming in, and it makes sense why we're consolidating in the region we are, because that selling really hasn't kicked in. So you need to see that transition in this case when you have that shorter term buying throughout the stock around 105 and they're making money to the upside. You need to see that transition of them selling and then shorting for it to be a high percentage number one short trade back to 105. All right, I hope you all enjoy, and I'm looking forward to doing more of these.